In the world of investing, it's so easy to get overwhelmed by all the information out there. There are courses, both paid and free, endless articles, news updates, and of course, YouTube videos. And before you know it, you've spent hours watching video after video without really getting any closer to the answers you were looking for. With so much information floating around, it can be tough to figure out what's actually useful and what's just noise. I know the feeling because I've been there myself. Confused, frustrated, and, honestly, close to giving up. That's why I'm making this video. It's a simple, no-nonsense guide to investing, from A to Z, completely free. So if you're ready to invest your time in learning how to invest your money, stick around. You're in the right place. After investing for 6 years, I want to simplify everything I've learned and give you only what you need to know to get started. This is how you start investing with confidence. One of the most common questions I hear from friends, family, or when scrolling online is, how much do I need to start investing? And honestly, the answer could be as little as $1. But to really understand that question, we first need to define what investing actually means. Here's a simple definition I think works really well. Investing, the act of putting money or effort into something with the goal of making a profit or achieving a result. So, by watching this video, you're technically already investing. You're investing your time in yourself. But I know you're here to learn how to invest your money to grow it over time. The good news? You don't need advanced math skills or complicated strategies to get started. It all begins with understanding the basics, the building blocks of investing. Think of investments as assets that help you build wealth over time, and every investment fits somewhere on what we call the risk ladder, a simple tool that helps you understand the relationship between risk and potential reward. Let's break it down. At the bottom of the ladder, we have cash. The main risk here is inflation and changing interest rates. Cash is great for emergency funds or to balance out the riskier parts of your portfolio. Next step up is bonds. These are a bit riskier than cash but still relatively safe. Inflation and interest rates are still your biggest risks here. Bonds are good for short-term goals where you don't want to risk losing too much value. On the third step, we find mutual funds. Here, professionals manage a mix of stocks, bonds, and other investments for you. You own a small part of everything in the fund, based on how much you've invested. These come with more ups and downs, but also better long-term profit potential. Step 4 is growth stocks. Higher risk, higher reward. The market decides the price, and you'll need to decide whether to hold or sell. Over time, these can deliver impressive returns, but you'll have to deal with a lot of volatility along the way. And at the top of the ladder, we have speculative investments like crypto and small-cap stocks. This is basically the gambling section. You might strike gold, or you might lose everything. This should either be a very small part of your portfolio, or none at all. So, before the next video, take a moment to think about where you are on this risk ladder. What's your personal risk level? And how long are you planning to invest for? In the next video, we'll dive into how you can build your own investment strategy, step by step.